Good morning, everyone. It's been a bit of a crap month from Trading 212. There's lots of drama and lots of issues going on. We need to discuss it. Welcome back, everyone. My name's Paul. I'm new to investing and I have an investing account with Trading 212. So far, everything's been pretty awesome and I've put a lot of money in with this broker. But this month there's been a few problems and we've been having quite a few complaints. I did have a massive video prepared on capital gains tax and how it's going to affect everyone. I still might just touch on that first, but we'll get onto the Trading 212 issues as soon as possible, and then at the end I'll answer a question about my portfolio. It's going to be a tough one, so get ready. First, I'll very quickly touch on Rishi and the capital gains tax issue. This pandemic has caused the government to spend a ton of money, and the taxpayer is the only one that's going to pick up the bill. And income tax and public services have taken a massive beating over the past 10 years. I don't think they could take it anymore. So Rishi needs to be a little bit more creative with how he's gonna get that money out of you. So he seems to be going for capital gains tax. I read the review and it was proper boring. That's why I'm making you sit through it now. But the highlights of it are pretty easy to just squash into a few sentences. Essentially, they want to attack the baby boomers because the baby boomers have all the wealth at the moment stuffed in their houses. So capital gains tax just seems to be the best way to get money out of people. First, they plan to hike capital gains tax up to the same amount as income tax, and then they want to reduce the amount of tax benefit that you get on capital gains. At the moment, you get a capital gains relief of 12.3k. That means in a standard investment account, you can make £12,300 tax-free. But a reduction of this relief to £6,000 or even £2,500 will mean that they will get tax off more people. Simply put, most people don't earn $12,300 off their normal capital gains, but a lot more people earn $2,500. So there's gonna be more people to tax. No one's actually mentioned ISAs yet, and I think they'd be hell to pay if they did. But it seems like a good time for people to start thinking about tax-efficient savings accounts. One thing I did find interesting though, which could piss off certain types of investors, is that the government wants to force trading platforms to give out your tax information. They make it sound like it'll make your tax compliance easier, but really they're just trying to grab your money. Speaking of day traders, they've been having a tough time on Trading 212 recently. This month has been pretty terrible for Trading 212. I've been affected by it too. I did a live video a couple of weeks ago and Trading 212 froze for hours. And on a recent poll that I did on my community tab, it showed that 35% of all voters have lost money recently due to trade execution issues. I do have my own thoughts on this and we'll go through it. Not everyone's going to like it though. But there are lots of things to talk about. People are getting scared. GC says, Paul, have you seen Trading 212 are reducing their margins with a 24-hour notice on CFDs? They've also been increasing their spreads massively and have pulled out of expanding into Germany after failing to provide statements on 2 occasions. Red flags, I'm considering moving broker. Look at the community forums, it's going mental. He's not wrong. The community forums went absolutely crazy about all sorts of stuff this month. First, I'll talk about the Germany thing. There's not a lot of news on this one, but they've been turned down or they've stopped it because Germany asked for 2 certain documents about tax and they basically didn't provide them. There's no further information on that whatsoever, but I can see why people are worried. Could they be hiding something, or is it a trade secret they just didn't want to give away? I would not want to speculate on that because I think it's just not fair. However, Trading 212, reach out to me, man. Reach out to me, tell me what's going on. Come and do an interview or something. I don't know. The next thing that's pissing off day traders is that the FCA has decided to ban crypto, and Trading 212 hasn't done very well at deciding what it's going to do about it. I think it has finally come to the decision that it's going to let anyone with open positions keep their positions open until they feel they want to sell. No idea why you want to do that, but I do feel like this is a non-story that people are just getting pissed off about for no reason. What is actually interesting is the upcoming increase in margin requirements and the bigger spreads. That has got a lot of traders' backs up. When traders make a trade, they often use leverage. And to save them from their own stupidity, Trading 212 is required to put in what's called a margin call. And eventually, if they lose so much money, Trading 212 just has to automatically cut them off. All brokers and trading platforms do this. And in order to keep the money safe, they have to hedge against your bet. But because the markets are doing something so ridiculous and so crazy right now, Trading 212 and more specifically interactive brokers can't keep up with the hedging. And because they can't guarantee the money, they've got to cut people short. This is a problem for all platforms, but for Trading 212, things might be a little bit worse. Trading 212 has seen ridiculous growth since March. It's added like 600,000 new customers. The company might not have scaled quickly enough, and it might not be able to deal with this amount of people. So Trading 212 might just be becoming a victim of its own success. And that is the first sign to proceed with caution and understand the risks that you're taking. Trading 212 is a new platform offering commission-free trading. There's a lot of companies out there that want to kill this thing. I don't think though that Trading 212 controls a lot of its margin requirements. I think it's at the whim of interactive brokers quite often. I think there's more to that than you think. But what's really riling people up on the Trading 212 community forum is that people keep getting stuck when the US market opens. I've had the same issue. It happened on the live video the other day. I've also had 2 free shares cancelled because they got stuck processing. It's pissed me off as well. But what really amazes me is that a lot of these people that are complaining do not understand what they're getting into. And I'd love to give you my opinion of some of the comments that I found in this thread. First one I'd love to respond to is this one from Bell, who states that Trading 212 is not in compliance with the Financial Conduct Authority. The company is supposed to provide a high standard of client service. I always find that statement very, very woolly. It can lead to a lot of interpretation. But the trouble is, this problem is being felt all around the world. Robinhood, TD Ameritrade, Vanguard, Hargreaves Lansdown have all suffered from exactly the same problem. Hargreaves Lansdown app suffers problems all the time. It's always having problems logging in, particularly at US opening. So I think it would be very hard to prove that Trading 212 is delivering a service that is below its peers, especially when it doesn't charge a commission for it. Alex Santos says, wow, for sure something really wronging happening. I can tell Alex really knows what he's getting into here. Mike C and Grodno say, now imagine the chaos trying to close your positions in the event of a market crash. This should make all of us nervous. It makes me really, really nervous that you think you've got the ability anywhere to get your money out in a market crash. Market crashes happen unexpectedly and are known for you not being able to get your money out. How do you think you've got the ability to predict a market crash and that Trading 212 is going to be the problem with you losing your money during it? I just don't think people fully understand what trading and investing is. Felix3 has got a complaint about the customer service on Trading 212. How dare these people speak to him or her like this? It's embarrassing that you behave like this with people that pay your salary. Sorry, this shouldn't be Felix3, this should be Karen3. And what makes Felix way more of a Karen than you'd expect is that Dow and Vedran are 2 community members. They've been on the community forum so long that they have a bit of control over it. They have the ability to slow it down and make the community a better place. They're not paid by Trading 212. Shout out to Dow and Vedran because they took a lot of abuse that day. It was quite funny to watch. But well done to them for dealing with all the Karens who really don't understand what they're doing. And while I know I'm making fun, there were some serious comments on there that need to be addressed. Like this one from Andre. This is expected when the service offered is free. Not sure what all the comments are about. I don't agree with this. Trading 212 is dealing with over $1 billion of assets now. It's handling over $1 billion of people's money. That's traders and investors. They really need to be shit hot. Even if they're offering it free, the service does need to be exemplary. They're a new fintech company who are now playing in the big leagues. They really need to up their game. So I can't agree with the idea that because it's free, we should expect some downtime. But what I can say is that if all the other companies are suffering from it, then it's not so bad. And while I don't agree with day trading really in any form, stop losses I do agree with, and they're there to protect people from losing a lot of money. A couple of problems did arise where stop losses didn't produce market orders for a couple of hours. That's a real problem that we might be able to blame Trading 212 for. It just depends how credible the accusation is. And Trading 212 blames Interactive Brokers. In case you didn't know, Trading 212 takes the order off you, it gives it to Interactive Brokers, and then Interactive Brokers buys the share or makes the trade that you want to make. And then it all comes back to you from Interactive Brokers. Interactive Brokers is a pretty big broker, and it means that Interactive Brokers is the one that suffered all the outages, like Hargreaves Lansdown, like TD Ameritrade, and like Robinhood. But one of the main things that sticks out to me, and where I think Trading 212 still falls behind, is what DC7 covered. Maybe an email to your client base would be more sensible than posting on here. Once again, Trading 212 has had an issue, and it's failed to inform its customers. We find out about this by going onto the Trading 212 forum. Why haven't they got a guy sitting there that can just send out an email to all or a notification to all accounts saying, sorry guys, we're having a bit of trouble right now. Or this is why we think it's happening. It's really frustrating for a lot of people. Trading 212 is probably going to still get all the crap and all the people shouting at it, and probably going to suffer quite a bit of litigation. But a lot of the stress and a lot of the complaints could be eased just by putting a notification out. Why don't they do it? Ultimately, whether you're day trading or investing, you should be doing the research into your platform. If you want to be relatively safe, Hargreaves Lansdown, Vanguard, all that sort of stuff are pretty good for it. Trading 212 is commission free. I still think it's a pretty good service, and I'm happy with that risk. I've made previous videos about Trading 212's finances, how it might be suffering on the CFD side due to regulation, how it's not making a lot of money off its invest and ISA side. But I do also think it's quite far away from going bankrupt. It's got no venture capital and it's got no debt. If Trading 212 was really in trouble, it could take out some debt and it could string itself out for a couple of years. That'll be the time when I start getting my money out. But I think there's a real problem here with people not understanding what they're investing in, not understanding what their platforms do, and not understanding the instruments and the risks they take with them. I think it's Day Trader 101 that you shouldn't buy on market open. That's the stupidest thing you can do. These problems are very minor to me. They haven't affected me at all. I'm into long-term investing. I'm happy to see some of my positions fall ridiculous amounts before they recover. I just know and fully understand that that's what the game of investing is all about. One day the bubble's going to pop, and I'm glad I'm not in the same investments that some of these people are in. I'm sorry, I know that's going to upset people, but it's just how I feel. For now though, I'm still happy to stick with Trading 212. I personally haven't experienced any real problems. My account's just ticking away, slowly making a bit of money. And Stuart Higgs asks, seen some of the videos and noticed you have changed from the UK to American stocks. What was the reason? The videos are great. Cheers, Stuart. I'm still in a lot of UK stocks. Most of my stocks are US. I feel that even though we suffer that 15% dividend withholding tax, I find that companies in America are generally a lot stronger, a lot more innovative, and they grow their dividends a lot faster. So even though we're taking that 15% cut, I think some of the companies in America are still a lot better than a lot of the FTSE companies. I have BAE Systems, that's a very strong British company. Recently, Boris announced an increase in military spending. BAE is going to get the lion's share of that. I think it gets about 13% of all British military spending. That company's going nowhere and it's going to increase its dividend. I also recently added Legal & General Group. It took me months to figure out the complexities of Legal & General, and I don't think I'm confident enough to explain it all on here yet. But essentially, Legal & General is an insurance company, and I saw it as a big value play. The dividend yield is massive and really safe, and I got in right before the vaccine. I knew that the vaccine was going to have a massive effect on this company. And since the vaccine announcement, it's gone up 37%. Just lucky, I guess. Rio Tinto is another FTSE company. I barely call it a UK company because it's just this massive international beast. Rio Tinto is essentially an iron mining company. Its price goes up and down based on whether the iron ore prices are good or bad. However, it is diversifying into copper and lithium, which might make it a little less cyclical. I have Royal Dutch Shell, which has recovered very nicely recently due to the rise in oil prices. And I have Segro and Tritax Big Box, which are two massive warehouse REITs. And finally Unilever, which has its problems but has done its job as a consumer staple during this crash. Unilever's there to preserve money and pay a dividend, and it does both of those pretty well. So yeah, I am still pretty big on UK companies. I just haven't really spoke about them much because they sit there and they do the job they're supposed to do. Relatively boring companies, to be honest. But I might do a UK stocks video pretty soon, just so the FTSE doesn't feel left out. Thank you very much for watching today. I'm sorry if I hurt anyone's feelings. The investment app that I used is called Trading 212. If you wanted to sign up and get invested, you can get a free share using the link in the description below. Also, check me out on Instagram. I'm going to put a shot up right now. And don't forget to check out the Discord. There's lots of investors there sharing all of their information. There's a lot of traders on there who probably aren't going to be very happy with me today. Thank you very much for watching, guys. And if you found this content interesting, please feel free to like, subscribe, and invest.